I'm delighted to say I'm joined now by George Magnus. He is a Senior Economic Advisor at UBS Investment Bank. Thank you very much indeed for joining us.
Hi,
Let's start with Portugal. It does look as if a bailout is necessary. It's probably going to happen. It's just who's going to ask for it. It's not going to be a huge amount of money, though, compared to Greece and indeed what would be necessary if this happened to Spain.
Not massive. I think sort of the word on the street is something in the region of 70 to 80 billion euros. I mean, I think as things stand, the Portuguese government was probably going to be in the market, the private markets this year, for something of the order of, from now onwards, maybe of the order of 20 to 30 billion. So the idea really, I suppose, is to alleviate or to take Portugal away from the obligation of having to raise money privately for a couple of years. In the same way, it's the same pattern really for Ireland and Greece.
Of course, as Ireland and Greece know, these measures don't come without strings attached. So
right.
Portugal has turned down the austerity measures in the government budget, but in effect, they will still have to have the same kind of austerity measures, won't they?
They will, and obviously the political situation in Portugal, of course, was not particularly, over the last 24 hours, not particularly helpful. But it will be part of the deal that if you're going to take a loan from the EU, then at least politically it's a little bit easier to sell internally, because then they can say it's not us that are doing this. We've been told to do this and so on. So that's standard format.
Indeed, indeed. Now, Ireland claimed that they were sort of railroaded into the bailout. There doesn't seem to be much pressure from the EU at the moment for Portugal to ask for a bailout. Is that likely to change?
No, but it has changed. When there was a time, probably about 3-4 months ago, certainly at the end of last year, when I think there was a widespread view, at least, that Germany and maybe some other countries were actually trying to put the pressure on Portugal, take the money, because we've actually got to draw a line in the sand somewhere. And the line in the sand somewhere is obviously on the Portuguese-Spanish border.
Yes.
And then that kind of pressure seemed to back off a little bit. So I think that I mean, it may take a little while to sort this out, because clearly we don't know what the political situation is in Portugal and who's going to be in charge of actually whether constitutionally able to request the money and receive it. And of course then there's the negotiations with the EU itself. But I think this has been on the cards for such a long time that I think it's just a question of winding down the clock now to the point where they actually take the money.
Indeed.
Yeah.
Now, we've seen the Spanish banks being downgraded, the smaller banks being downgraded today. Spain has come out several times over the past few months and said, we want to re-stress test our banks, we want to be very transparent. But as we know from the Ireland situation, it's very hard to put a figure on how much it costs to stabilise banks.
Yes, and you only know that if you know how the assets on the books of the banks are being marked. So I think the Spanish finance minister has, on at least 2 or 3 occasions, said that she thinks that, I think she's put a number of 20 billion euros.
Yeah, that's right. Yeah.
I mean, in my view, that's about 5 times too little. So I think it's at least 100 billion euros for an adequate recapitalization of Spanish banks. In other words, if we were to get all of their Tier 1 ratios up to what would be generally regarded as internationally comparable levels, I think that's the kind of money that we're talking about.
And the bad debts are continuing to grow. I mean, I do keep making parallels to Ireland, and I know there are different scenarios, but you do get this situation where it's very hard to find out exactly how much they need, because they don't know how much they need. That figure is not set in stone.
Yes, and I think that's the problem. I mean, of course, today with all the problems erupting in political problems in Portugal, actually the market in Spanish bonds doesn't seem to be particularly ruffled. Having said that, of course, there is a continuing issue, which is the transparency of the valuations of the bank's assets. And until, for example, there are, certainly property assets which are valued at an official property price index, which is just a pipe dream, according to anybody that knows the Spanish real estate market knows that those prices are much, much lower.
Indeed. I'm just going to break in here because we've just been told that Fitch has cut Portugal's credit rating to A-. It also has put it on an outlook for a negative outlook, so it may be cut further. That's probably not something that's terribly surprising right now.
No, I don't think so. I mean, as we were talking before about winding the clock down until this kind of bailout or the loan package actually is agreed. So I think, the market is, I think already, I mean, it's surprising in a way that actually elsewhere in in European markets, as your program's already indicated. I mean, the mood is actually pretty upbeat.
Indeed.
So I think that just tells you that, okay, we've understood this. It's priced. Kind of get on with it.
Indeed,
yeah.
Indeed. Now, you've recently written a book looking at emerging markets, whether they are going to shape or shake the world's economy. If we look at what happened with sort of Celtic tigers in Ireland and elsewhere, where we had countries that 5 years ago were leaping ahead and are now in lots of trouble, is it possible we may see the same kind of thing with some of the emerging markets, or are they going to be our saviour?
Yeah, I'm going to say yes, but don't hold your breath, okay? But one of the interesting things that I think the financial crisis has kind of left us as a legacy is a really sharp divergence between credit and inflation developments in the Western world and in emerging countries. So there are quite a number of countries. I mean, we could just cite, China, Turkey, Brazil, to name but three, where there is very, very high credit creation going on. In fact, in most of the major emerging markets that people kind of roll off the tongue or think about very quickly, credit growth is running at about between 20 and 30% per annum. And actually this is now for the second year, because obviously the measures which many emerging markets took after Lehman's went broke was obviously to stimulate bank credit growth and government borrowing and so on. So this is the kind of situation that we're in, and actually unchecked, then I think that this credit cycle actually will end the way that all credit cycles end, but probably not this year.
Okay, well, at least that will give us a little bit of a little bit of time to catch our breath. George, thank you very much indeed.